All right, folks, we are live. Top trades. I'm here with my good friend Enrique. Enrique, in the chat this morning, I told everyone no markets in turmoil graphics, no panicking here, just sane market discussion despite some of the action we've been seeing. So how are you feeling after the Nasdaq drops 4% to start off the week?
Well, I'm going to tell you in a second because I'm going to get to something we just spoke about. But
Okay.
I have you seen the graphic that if CNBC says markets in turmoil, the hit rate of like what the market does in the next week or month
Yeah.
or whatever, it's literally 100%.
Yeah.
So we're waiting for markets in turmoil. Look, you and I was talking to a friend, walking him off a ledge earlier this morning,
Oh
and
boy.
I said to him, if the stock market is down 12% in 3 weeks, you want to buy it every time in a bull or a bear market. That's just a fact. And we can go through some of the charts. If the stock market is down 12% in 3 months, you probably want to step to the side. And, and we'll pull up the charts in a bit. That's what happened in 22,
Hmm.
which we've spoken about, that, you got to sell off into January 22nd. And we went through this last week, this exact chart, and the market bounced 5% in the next 5 to 10 days. And a month later was 5 or 6% higher. Yeah. So if you go there, and add the 50 and 100-day moving averages to this chart. So, people are saying the charts look a lot like this.
Yeah.
And, you can see it. So just go to that, go right there to the big green candle there. Yeah, go further. Yeah, there you go. That's January 22nd.
Yep. There we go.
So, here's the thing. That was the beginning of a bear market. Maybe
Hmm.
we're at the beginning of a bear market. I don't think we are, but maybe we are. And in that case, you had a chance to trade out, and this is just on the S&P, so everything else traded a lot more. You had a chance to trade out 5% in the next week, and you had a chance to trade out, a little bit more in the next month. And so you always kind of want to buy the markets when they get this oversold this quick. The challenge is, do you get to a point where the trend has changed? And that's where, when you go take that chart out and go to where the 50 and 100-day drop below the 200-day right there, that's April 29th. Yeah, right there, April 29th. And then at that point, the market was down about 14, but it
Hmm.
was also the point where because we were down 14 in 3 months, the trend had changed. And, even that's not a guarantee that you're in a bear market, but you definitely want to move to the side. And I'll give you the one last data point because I was looking at this right before we got on here. Go pull up the 23 sell off that we saw that began in July and went to October. Because there's a lot, there it is, you know. So I'm going to tell you exactly what we're going to. So I've got two things with certainty, actually. So here's some certainty. Okay. I am absolutely certain this is going to bounce in the next week or two. Okay.
Yeah.
The
Hmm.
other thing with certainty is look at what this did here in this V bounce.
Yeah.
We
Right
went
here.
back through the 50, we went back through the 200-day, we went back through the 50-day, and then we went back through the 100-day. And in a month, we knew when we were at the same spot
Yeah.
back in whatchamacallit in 2022, we lingered below that 200-day,
Yeah.
below that 100-day, even in January. So there, go to the January. See, we didn't get through the 100-day. See that right there? And so,
Yeah.
I actually think we got a pretty certain moment here. Two things. Number one, I'm real certain it's going to bounce and it'll be a nice, big, healthy bounce. And number two, then what I want to do is just watch that 100-day. And if we get through the 100-day, which I think we will, like we did in 23, then it's back to the bullish trend. And if we don't, you should, just bring risk down and be more concerned because, as we talk about, there's different trading, strategies for different kind of market environments. And we're not always bullish. Like I've been bullish the entire time we've been doing this because the market's been bullish, and I'm still bullish. but I'm watching more carefully now. So I think those are the things, and I like that 22 example and the 23 example. What I like about them most is that they're current. It's not like we're going back to like 1997 and being like, look at what happened in 1997. No, we're taking stuff that happened recently, which to me has more relevancy.
Yeah. Just to talk a little bit about the effects of the current administration and how people might be perceiving that. I see a lot of scuttlebutt talking about how Trump 2 is a lot different from Trump 1. And I think there was kind of the realization of the fact that like he's not so fixated on every tick of the Dow like he was. Because you can go back during the first administration and look at all those tweets where, I mean, he was basically every time the market was up a little bit, he had something to say about it and claiming victory over the market going higher. And then over the weekend, he's on the news and he's like, well, I'm not really watching the markets. Do you think that's true, or do you think the market is taking that as truth, that he's not going to step in, or he's going to be ignoring the markets here and let the market do its thing? Or how do you interpret that?
Look, I think there's a lot of answers to that. Let's take this on different levels. Number one, what has he really done in terms of actual government cuts at Doge and actual tariffs? They're ramping, but he's not actually done that much. It's been more threats and movement in a direction. So, I was making the comparison. One of the things that happened in 22, we talked about this the other week, right? That 22 bear market, we had rates going, the Fed taking rates from 0 to 5. Inflation had just gone from 3 to 10. M2 was shrinking. And then we got the Russia-Ukraine situation. So I don't know, maybe I could make the tariff Doge analogy to Russia-Ukraine, but Russia-Ukraine actually happened. It wasn't a threat. It was a real exogenous shock. And it's TBD on how real these exogenous shocks are in terms of tariffs. I think this April 2nd date is really interesting. And so that's why, I'm still, and what's interesting also about 22, when the market rolled over on the 100-day, that was actually the Ukraine invasion. That happened in February. So I think that we just need to wait and see. Like, we're going to know, and it's kind of what I'm saying too, in a month to 3 months, we're going to know a lot better how much of this is negotiating tactic versus not. I still do think he cares deeply about the stock market, but I also think you're dealing with a situation, and this is a multifold equation, that, he didn't know what he was doing before. Like, and not because he's a dumb man. He'd never been president. He didn't think he was going to win. He literally, I mean, it's well known. He didn't think he was going to win the first time. And fair. So he didn't really have a team. And then he chose a bunch of guys that weren't his guys. And, the first couple of years was just him figuring it out. He's got a team this time. He knows what he's doing. He knows what he wants to accomplish. And he only has one term. Mm-hmm. So he's acting with a lot more aggression. So I'll sort of take it two ways. I don't think he's afraid to inject economic volatility to achieve broader goals. I do think he is exceptionally focused on the stock market, but he believes those broader goals will take the stock market to, 8,000 or 10,000. And that's his goal, is that by the end of his administration, the S&P 500 is at 10,000. I guarantee you that's what he wants to do. So, but again, I'm just going to get back. We're still the high on the S&P 500. I'm looking at the chart here, was February 19th. That's 3 weeks ago, man.
Yeah, I know.
So this is my point. Like, believe it or not, a market down 12% in 3 weeks, I'd buy all day long. A market down 12% in 3 months, okay. I'm a lot more concerned. And if the market's still down 12% in 3 months, we're going to be trading very differently, because that's going to tell me 3 months from that high, we're 1 month, not even 1 month in. That would be, well, lo and behold, it'd be the end of April, which, by the way, is after the April 2nd tariff date that I talked about. You know, so does he care about the market? Absolutely. 100%. I think he measures the stock market is his primary barometer. Is he willing to see the market go down 10 or 15 to have it up 50? Yeah, he is. Is he going to be right with that calculation? Who the heck knows? But let's just take a step back to what I was saying about 22, and I got one data point that you and I were talking about is that in 22 rates were going up a lot. Now they're not. Inflation was going up a lot. Now it's not. Money supply was going down a lot or going down. Now it's not. GDP growth is fine. We just had the strongest Q4 earnings number the strongest quarterly earnings we've had since 21. Mm-hmm. It's TBD about how much of this is threat versus not. But let's go back to the final point here. Every stock market in the world is hitting new highs. China's hitting new highs. Germany's hitting new highs. Not everyone. I mean, Brazil and what else was down? Was it Mexico? I forget. There was one of them. But these other we don't have global stock markets hitting new highs, as we're on the verge of a global collapse. And it's just not how it works. And we can say this time is different because of Trump and tariffs. I've just been here too long, man. It's not different. So I think he's negotiating. It's the art of the deal, and it's scary. But I got to be honest with you. I look at this sell-off, and I think this would have happened no matter what. I mean, Trump wasn't here for the Japan yen carry trade back in July, August. But what did the market do then? It came off a really overbought RSI, and then it sold off really steeply. That time only believed the 100-day. It just was due for it. And this is what happens in bull markets. So right now it's TBD. You buy it in the short term, and then we watch and see what happens, both to price. Remember, price equals truth. And then we can see how the fundamentals develop. But the next move is clear. So Mark Darnell, what do we buy in the next 2 weeks? Look, I think what classically has happened is you actually get a bounce back of the stuff that's down the most. And look, I'll talk about a name that I'm on the record for, Talent. Just pull that up. I refreshed the numbers on Talent last week. This company, their numbers are locked in for the next 2 years. They're going to, and they have a policy that they will do this, have enough free cash flow and leverage to buy back 42% of the stock in the next 20, 30 months. And I'm going to give you one other thing. So Talon, remember, is an independent power producer, right? They own a big nuke and all that. They're a huge tariff beneficiary. Do you know what happens if Ontario stops providing power to New York, Michigan, and Minnesota? Well, they got to get that power from somewhere, and they're going to get it from Talon, which is in PJM. So it's not in those areas, but it will still feed into it. The other thing, Trump said three things. Well, he said two things about these tariffs, and there's one that I think is the real goal. They've talked about fentanyl, obviously, which I just honestly think the Canadian thing. The only reason that fentanyl is an issue for the Canada piece of this is he needs fentanyl to be able to unilaterally do these tariffs without Congress's approval. If he's got a national emergency, he can do whatever he wants. That's why the electricity thing, he's doing that now too. This is on the aluminum and steel that just went through. He's not going to get rid of the fentanyl thing, because then if he says, oh no, there's no more fentanyl problem, he can't do this unilaterally. So it's a little bit of a straw man. Not that the fentanyl crisis isn't real, not that we need to fix it with Mexico and China. I think his real goal is to fight back against China. But in the meantime, I think he's absolutely wants more reshoring. He's like, why should we buy a car that was made in Canada when we can buy the car made here? We could get into the debate about, whether that's actually good economics or not. That's what he wants. Well, guess what? If we have a factory that gets moved, or production that gets moved from Ontario to, Michigan, guess what they need more? Power. So this is what you're seeing in this market. These names are examples. So I think you can go into, there were a lot of AI, this is to your question, Mark Darnell, a lot of AI beneficiaries that were not direct NVIDIA or technology companies, et cetera, but had gone up. But they were going up because they had sound, numbers behind them. I think that's the kind of thing you want to buy. And we got one in the Maverick tomorrow that I was like, holy cow. I hadn't this company's incredible. Like I knew it was a good company. I did the numbers. I was like, I can't even believe how well this company's done. And the stock's down. They reported great numbers on the 26th. And the stock's down 35%. Stock trades at 15 times earnings. They've grown earnings every single year for 10 years, and earnings are up tenfold. It's not valuation, folks.
Well, back to what you were saying too about what stocks are getting hit. We were talking about that earlier, and kind of knowing what's happening, under the surface of the market. It's been the big winners, and I think that kind of speaks too about, whether or not this corrective move would have happened with or without Trump. When you have like Robinhood and Meta and PLTR and all these other companies, I mean, these were all just going straight up in January, and seeing these reset and fill these gaps and all that, that's pretty normal behavior for the high flying stocks like this. So, I mean,
it's healthy.
But yeah.
And it's healthy. And you can't look at it and be like, I mean, again, so let's go, because I've lived through bear markets. I tell this to people all the time. I spend all my time thinking about bear markets. Okay. And I just know what bear markets look like. And there's credit crises. Like, you don't have these other markets, the global markets at new highs. You don't have credit spreads doing what they're doing, all this stuff if we're going into a bear market, right away. But also go to this is like, if the issue is tariffs, well, yeah, the stuff that gets hit by tariffs is down a lot, but the stuff that doesn't get hit by tariffs at all is down more. Yeah. So this gets to the point. I think that tariffs are the symptom, not the cause. The cause was everyone post-Trump and post-crypto and like, oh, crypto reserve, he's going to do the world's perfect now. Trump won. Republicans have both houses of Congress. Obviously, the S&P is going to 8,000, right? Well, when everyone agrees on something, then it turns out to not be true. The market's going to do whatever it can to F the most people, is a very popular saying. That's why I also think that the whole tariff thing is just overblown. I just think it's when everyone's talking about the same thing. I'm just looking at the comments here. Mark, Meta, Amazon, Google, those are actually perfect examples. Meta's my favorite about, and Google's second, about companies that aren't really impacted by the tariffs. We could argue that Meta, I guess, is exposed economically if we have, a downturn, but Meta don't import no steel. Like, I don't know what's the, I guess someone said to me, well, Google, China's going after Google. I'm like, you can't even get YouTube in China. China doesn't really care about Google. Yeah. So the fact that these stocks are, selling off like this, I just think this is actually a normal correction. It doesn't feel normal. No correction where you lose money feels normal.
Right.
And they wouldn't be good corrections if they did feel normal. Yeah. So it's supposed to be painful.
Well, and we just looked at PLTR and looking at Meta right here. It's the same situation where, I mean, this was an unsustainable, record-breaking, 20 days, 21 days in a row higher or whatever it was. And of course the air gets let back out of that and it's right back down to where it started. So, I mean, to say something like this, that Meta has crashed or whatever, well, it's right back to where it was, in the middle of January. It's just resetting that. So.
Yeah, exactly. So, when does it bottom? I mean, look, we actually know when things, we have some context for when things bottom. When the RSIs get down here, or when sentiment indicators have gone so bad, So, like I said, I'll tell you this right now. And maybe we're going to have more of these later this year. I would say buying the market today for the next week to 2 weeks is the highest certainty bet that I have seen in the last year to 18 months, with my only other analogy being August 5th of last year where we were buying. But I'm going to go on record. I think this is the highest certainty buy that you can get. And let me explain. Because even if we go into a bear market, you bounce from here. And that's what I did. Like all my hedge funds, we always made money in bear markets. This is a funny story. I'm going to get a little in the wonky and a little in the weeds. We did a lot of short selling. The funny thing is, when we made money in bear markets, we made money on our shorts, but we made more money on our longs. So you'd say, well, how did you do that? Like, everything went down. And what happened was we had balanced books. And as the market sold off, the market would be down 12 and we'd be down 2. Then what I do is I cover my shorts and I buy a bunch of stuff that I thought was just ridiculous to get sold off like that. And then when it bounced, because I knew I was in a bear market, I would just undo the trade. So we ended up making money on both sides. And but again, right now, I still am 90% we're in a bull market, 10% we're in a bear market, but 100% that we bounce in the next 5 to 10 days.
Yeah. So, okay, I'll give you a hypothetical because I like where this is going right here. Let's say that we're in an environment where you think we might roll over again and you're trying to buy some of these oversold conditions. What do you use generally if you think we're in more of a bear market situation where you want to like buy these dips and like sell them on the rip? How do you condense your time frame? What do you look for an exit in trades like that, like when you were trading in 2022?
Yep. Price.
Okay.
Price. If you make 10% in a day to 4 days, 5 days, sell it.
So the faster the rip higher, the more you want to jettison that thing. Okay.
Because you can't go wrong, right?
Right.
So like I would look like right now, let me just look here on the S&P 500. S&P 500, we're down 61.44 to 55.93. 61 hold on, 61.44, 55.93, 61.44. We're down 9%. Okay. I think that we're very likely to bounce back up towards that in between the 200-day and 100-day. When that happens, you're going to get things like the IPPs. You're going to get things like someone's asking about Credo. You know, let's go to Credo because someone's asking about it.
Sure.
Blew away numbers. I know this isn't the alter shebang. Right. This stock could be back at 60, 55 to 60 in a nanosecond. But here's the thing. As traders, you buy Credo today and you make a quick 15 to 20% on Credo, you get out. Now, part of it will be like, you'll be like, well, but Enrique, what if you're right about the bull market? It's a 90% chance that it's a bull market. And this thing's going back to 70, 80, 100. That's fine. You can buy it again after we get back above the 100-day moving average on the S&P 500. Yeah. But right now, with the RSI on this off the back of great numbers, you want to buy this and sell it. So use price. And that's that when I was counterpunching in 2022, the strategy that I use for the Maverick, I think I talked about these numbers with you. It's the strategy that we use, it was called Empire Elite Trader. There's some people on this call who were subscribers there. That strategy, I want to say we did 74 positions. We had a 72%. Oh, here's the numbers. I got the exact numbers. I have it right here. 73 positions, 74% positive hit rate in 2022, all long. S&P was down 20, NASDAQ was down 33. We were up 8. So I made money on 3/4 of my positions and I was all long and the market was down double digits. But the reason is we just waited until right now.
Yeah.
This moment right here where we are in the markets, and it said, okay, the numbers are all through the roof in terms of negative sentiment. So yeah, I think you buy Credo and you just sell it up 15, 20, 25%. I don't care whether you get that tomorrow. I mean, if you get it tomorrow, definitely sell it.
Right.
I mean, because by the way, you would sit there and say to me, well, how is it going to go up 30% in a week? Well, guess what? On March 3rd, the stock was at 57. Well, 57, 42 divided by, that's 36% higher to go back to where it was a week ago.
Yeah.
Holy cow. A week ago.
Yeah, so, a lot of this stuff got absolutely clobbered. Yeah, absolutely.
And this is a great example too of one that the numbers were just awesome. Like, NVIDIA's numbers were awesome too, but this was even better. Like it's incredible, the numbers here.
Yeah, for sure. Yeah. It feels like we're almost to that spot. I would have been a lot more excited about yesterday's sell-off if we had gotten more of a margin call whoosh type of move in the afternoon lower. It just felt very, very steadily. I was telling you earlier, like hitting your head on every stair on the way down.
It made me chuckle.
So
it made me
yeah,
chuckle and gave me a headache. But
oh yeah, I'm not trying to do that. But you know what I'm saying though. I try to look for those capitulation type of moments, and I feel like we're not quite there yet, but we're getting close. We're getting close.
Here's the challenge with that, and why we do something a little bit different in the Maverick. And again, you and I have we've got related strategies, and but this is why I kind of say I will my max number of positions probably 25, 30. And right now I've got like 16.
Yeah.
Because I'll just keep on, and that number might grow rather aggressively, sooner rather than later. The reason is, so here's my point to what you're saying. Yeah, I don't disagree with what you're saying. I'd love for that to happen. But you know what can happen without that happening? The market snap right back.
Yeah.
Credo could be at $56 in a week without we've got 13 positions in the Maverick. I should be adding more. Credo could be back at $56 in a week without any whoosh happening.
Sure.
So you want to have some skin in the game to be ready for that.
Yeah. So yeah, like you've mentioned that before. Like you'd rather be, and tell me if I'm putting words in your mouth, you'd rather be a little bit early on that so you're not missing the move right there.
Yeah, because and again, I guess maybe also the one difference is like I look at the Maverick, I look at it as kind of a portfolio up and down. Usually at the highs, I'll have 3 to 10 stocks, and at the lows, I'll have 25 to 30. That's what we did in 22. Is I've got a chart that was in the analysis I did there that literally showed what we did. Maybe I'll even publish it in the Maverick, but it just showed we used the market weakness to our advantage, but you had to sell high. This is what the conversation we were having the other day about Palantir, about, people right now that followed. So sometimes it's about time, not price. Okay. So what are a couple of things we just said? The market scares me more down 15 in 3 months than in 3 weeks. Okay. That's
you're
more
talking about a bigger trend change as opposed to a knee-jerk reaction.
Exactly. And with individual stocks, if I double my money in a day, a week, a month, or even a quarter, I always want to be a seller 9 times out of 10. But if I double my money in a year, I probably want to be a net buyer. It's the same thing, identifying short-term trends, overbought, oversold, versus intermediate term trends. So the funny thing about Credo, which was a great call out of Alchemy, Credo's an awesome story, is, people that bought it back at 30, you should have sold 60% of your position at 70. We've talked about this. I think maybe on the Maverick, I was talking about this math, where you sell 60% of your position with something that quickly doubles. Because, if you sold 60% of your, I know it's talking about it now. It's like, oh, thanks, buddy. You should have told me that then. But this is a rule because it's going to happen again. If you sold 60, you bought it at 30, you sold 60% of your position at 70, you're sitting, by the way, in that situation, you're sitting on your original capital plus a 30% gain, and you still owned a bunch of stock. So now when it pulls back to 40, you're like, gimme, I'll do it all day long. So, this works in both bull markets and bear markets, but yeah, I think people should be, getting ready. And again, sell high is the key to buy low when you're trading.
Yeah.
Because if you make a ton of money, if you're max long at the, go look at your portfolio sometime. This is another way to do it. Look at the value of your portfolio. And as the value of your portfolio for trading, okay, investing, we can have another conversation where there's a trading call. As the value of your portfolio hits new highs, especially as really big new highs, you should be pulling down the exposure. Just say, hey, I hit a new high, I'm going to sell 5%. Hit another new high, I'm going to sell another 5%. Hit another high, I'm going to sell 5%. Worst thing that happens, you got more cash than you ever had before because you just sold, took advantage of all the new highs.
Yeah.
but then it allows you to buy the fear that we have right now.
Yeah. I think it comes down to, I mean, this is all great stuff that you're saying. It's a bit of a disconnect to learn that, because you have to rewire your brain, because most people, when they see things going higher and higher, they want to bask in those gains instead of selling. And then when they see things get lower and lower, and instead of thinking like you're thinking, they're thinking, oh, I got to get out of here and ditch this and sell this and get out of the way, because they see the sharp drop and they're not thinking along those lines. If you can rewire the brain and reverse that thinking, then you're going to do a lot better, especially with your type of system.
That's trading. I mean, the other thing too is I think that also, if you ever have this conversation in your head to go, I don't use the Lord's name in vain, but OMG, I can't believe how much money I just made. So,
right.
Like if you go, whoa, I just can't believe how much money I just made. You should be selling some, Anyway, like, again, it's like us talking about a beautiful sunny day when it's a hailstorm outside right now.
Right.
Now's the time you should be buying. I'm just looking at these charts, and, buy one stock today, buy another 2 days, buy another. I don't know what the timing is going to be, but I know it's going higher. The S&P is going higher by 5% in the next 5 to 10, 15 days. And these things, Credo, you name it, they're going to bounce a ton.
I've started getting some text messages, they're starting to trickle in, the type. And a friend of mine, a neighbor of mine who I go on my morning runs with, the first thing he said to me this morning when we were out was, I didn't look yesterday. Like, I'm just not looking, and he's not a trader, obviously, but like, that's the instinct right there. It's like, okay, I'll put my head in the sand and I'll just pretend like this isn't happening. And maybe that's good if you're just a buy and hold type investor. But if you're in this business of trading, this is the time when you want to be paying attention, not the time you need to be closing the brokerage account out and stopping looking at it.
Well, and something else I said in the Maverick, I think someone just asked about SMR. I want to make another point too, is the other thing that we would do in our hedge fund that was so successful was when the market sold off, we would swap out for higher quality names that were down just as much. So, let's deal with SMR. This is a good one. Okay. So SMR is one of these small nuclear reactor companies. Company's fine. Technology's fine. Look, the stock went from 6 to 30 back in Q4. I'm going to tell you something. I'm looking up at SMR's revenues here. SMR does 37 million of revenue, going to 57 million, going to 143 million. Needless to tell you that they lose a boatload of money. They're losing $140 million this year after losing $500 million the last 2 years. But let's go back to that chart. SMR, from a recent high of 26, is down 40%. Okay. SMR will probably bounce. Talon is also down 35%. Talon, great balance sheet, free cash flow, buying back 40% of their stock. So I would take whatever you have in SMR and sell it and buy Talon. They're both nuke, except one of them has a giant nuclear plant and a great balance sheet, and the other one doesn't really have anything yet and is burning a bunch of cash. And they're down the same. So you get opportunities like this when the market gets this oversold. It's like this company that we're recommending tomorrow in the Maverick. I was stunned when I went through the numbers. How good it is. And this is what you can do in this environment. You don't need to reach. This was we talk about. You and I were talking about like Rigetti. Everyone was asking about the quantum stocks. Another pull up Rigetti. I don't care which one of the quantum stocks. 3 months ago, everyone was reaching for the quantum stocks because that was the only thing that there was, like because they were going up. They were going from 2 to 20 or whatever. But now you've got names that are the highest quality names in the world that are down 30, 40, 50%. Buy those. Because, by the way, if we're wrong or if we are going into a bear market in 3 months, Rigetti's going to 2.
Yeah.
Or 1. You know what's not going down 90% from here? Talent. It'll actually probably go up, given the business that it is and the valuation. So I think this is a chance to to like trade up in your portfolio,
Go
where
higher
you can
quality,
say
a little bit of
go higher
fundamental
quality.
backstop.
Yeah, exactly, exactly.
Yeah, that makes a lot of sense. Yeah, I mean, when people are lighting their hair on fire and the FOMO is, running hot, they're buying anything, and the numbers don't matter. And then when things get a little dicey, all of a sudden those numbers start to matter a little bit more. So that's an
Well,
excellent point there.
and again, let me just give this other. This is the big caution. I don't think we're going into a bear market at all. I really don't. I give a 90% chance we're not. But if
Yeah,
we are, Rigetti, SMR, NNE,
yeah,
all of these small modular reactor companies, all of these quantum companies, and this was a great winner, SoundHound.
yeah,
Those stocks are going down 90%.
yeah.
Okay. So I can buy high quality stocks today that have 50% upside and maybe have 20% downside in the bear market. Or I could buy Rigetti that maybe it's got 100% upside, but it's got 90% downside. It's just, you don't get, this is a gift. The
Yeah.
market right now is giving you, gift after gift after gift.
I want to shift gears and talk a little bit about crypto right now and get your thoughts on that. I'm still in the same boat as I was last week and the week before. Once we lost 90, I feel like we're just in no man's land here, and this thing's going to need to land lower, somewhere in the 70s, before we can think about like getting more bullish on crypto. And I know all the other coins have been kind of crushed, especially the smaller ones right here. But I mostly just watch Bitcoin. Do you see Bitcoin any differently, or are you kind of in the same boat as me?
It gets back to it is exactly what we talked about last week, which is I'm just pulling up a chart here. If we go last year in January, from January 26th, Bitcoin went from 40,000 to 73,000 on March 13th. So in 6 weeks, it went up, it doubled.
Mm-hmm.
And then for the next 6 months, it consolidated.
Yep.
With the 50 and 100-day moving averages actually coming below the 200-day moving average. I don't think it's quite the same as what I would say with the stock market.
Right.
I feel like Bitcoin's got that work to do in front of it right now.
Mm-hmm.
That we're still 50 and 100-day or way above the 200-day. Look,
Yep.
I think Bitcoin's more likely to see 93 than 72 in the next few weeks. But
Okay.
after that, I just think it's got work to do to consolidate, and just exactly like it did last year. And last year, look, it consolidated in a very bearish pattern.
Yeah, it's a
Right?
super wide range. Yeah.
If you go back, I mean, it was higher, it was lower highs and lower lows the whole
It
time.
looked very toppy even right here, like it was going to roll over.
Yeah.
Yeah.
And then I think the election saved it. And so I wouldn't short it. I think it probably bounces with the market here. It's high beta. So
Yeah.
again, I think you're probably seeing something with a 9 handle before you're seeing, something with a low 7 handle. But I think it's going to have time. It certainly doesn't have momentum, and it's wounded. It's wounded. So, what I thought was most interesting, you brought it up earlier. Look at Hood.
Right.
Hood's a great example of these stocks that had good uptrends,
Yeah.
and now are consolidating. Hood's a lot more interesting to me than Bitcoin here.
Yeah.
And the reason is, look, did you know that Robinhood's like the 3rd largest holder of Bitcoin on the face of the planet?
No, I didn't know that.
And one of the ways that Robinhood is valued is on assets in custody. So that if Bitcoin went up 5-fold, the assets in custody at Robinhood go up like 30% or 40. Oh, no, sorry. If it goes up 5-fold, assets in custody like double or go up 2.5 times. It's just math, right? Because they hold a bunch of Bitcoin, it goes up. It's not their Bitcoin, but people trade off of that stuff. And so I think Hood is a much better way to play this, because Hood's got a lot more stuff going on.
Yeah.
I don't know how many people trade on Robinhood, but if you haven't checked out Robinhood because you just thought it was like, oh, that's for the meme stock idiots, like Robinhood's really awesome right now. Like, it's just super user friendly, all that. So, it just gets back to what I was saying. We don't need to, and not that messing around with Bitcoin's bad. I think Bitcoin's great. I think Bitcoin
Yeah.
goes to 1 million. I don't have any change in that. You just have a moment right now. I think Hood's great, Paulie. Like you have a moment right now where you can just buy awesome names that are down now. Yeah, Robinhood's down, been cut in half. I don't know
Yeah.
that I really look at it that way because I don't really know that it should have been there. Robinhood's down 25-30% from
Yeah.
where the actual basis, which means that if it goes back to that high, it's up 50. So this is a great time to be, and this is what I would say. Actually, I'm going to go out and say this. This is another thing to do. Go through your stocks, go through all your losers, and anything that you have that's under $1 billion, $2 billion, $3 billion market cap, sell it. Get rid of it today. And go in and buy the Hoods, the Talons, a lot of the stuff that we have in the Maverick. Because here's what I'm going to tell you. When the market bounces back, those big names that are high quality are guaranteed to bounce back. Mm-hmm. With the smaller names, these highly speculative names, it's a coin flip. Now, mm-hmm. the heads you win side of the coin flip is they go up a lot more. But if we're wrong about the market and we actually are turning over in 2 or 3 months, you're looking at those down 90%. So I literally I'd probably use $2.5, $3 billion, take everything that you've got below $3 billion, liquidate it, and instantly buy Talons, Hoods, buy what I'm going to say tomorrow in the Maverick. I think that's a home run trade, as good a trade as I've seen in years.
I like that a lot. And, thinking, a little bit about how the average speculator probably feels. They were probably very overweight a lot of those AI type names in December, January. They were probably very overweight crypto. They're going to be wounded for a little while, and it's going to take them a while to come back into the market. I don't want to compare this market to like what we saw in 2021, but remember when we had that big speculative boom in 2021, it was the quality names that, took over and were marching higher when crypto was down or to flat until later in the year. And, a lot of the meme stocks and all that were down to flat the rest of the year. So I can see the parallels to what you're saying there.
And that's what I find so interesting just about the power and construction names right now. And I know this isn't so by the way, we spend a lot of time on technicals. My trading style involves a fair amount of fundamentals. I think yours involves some. The thing is right now on technicals, all the stocks are the same. Yeah. They're all down. They all kind of look the same chart. So now you have to begin to differentiate, and you can differentiate on beta and market cap, but other than that, what do you differentiate on? That's what I find so fascinating about the power names and construction is that they're winners from Trump tariffs. Like if we think AI is going to take a pause, which it already, obviously has, but it hasn't fundamentally, because the last data points I remember seeing were that every one of the hyperscalers raised their CapEx by 25%. NVIDIA blew away numbers. Credo crushed numbers. Yeah. So 3 weeks, man. 3 weeks. Be patient.
I have it written down on your. I have an Enrique predictions page in my notebook. It is a little bit scribbly because I have bad handwriting, but I do have it down here so we can talk about it in the weeks ahead. Speaking of hyperscalers and all that stuff, the semiconductors, NVIDIA. There's a name that's been rolling over since earnings right here. What do you make of a chart like this? I know everybody's talking about, like the market can't go higher if semiconductors don't go higher with it. I don't know if that's necessarily true.
NVIDIA is one of the best charts I've seen. Holy cow. I mean, like that chart actually looks pretty good, meaning that like the amount of damage at NVIDIA is relatively small.
Right.
I mean, I don't know. Like it was at 150, now it's at 110. That's down 40. I mean, compared to some of these, it's a huge company. So down 27%. I mean, I don't know. I've seen a lot worse. NVIDIA, I would consider this NVIDIA chart holding in would be, it's actually, I get the whole head and shoulders thing and all that. My chart's a little bit different than yours because mine's a little bit shorter.
Okay.
But I think NVIDIA is just fine. And look, I think NVIDIA, look, I think Nvidia sees 130 before it sees, I'll even go so far as to say Nvidia sees 125 before it sees 100, even though 100's right there.
Yeah, no, I like that. I like that a lot. And it's kind of like, I mean, where are we back to right now? Back to May of 24, just going nowhere there. I mean, yeah, that's like
the biggest challenge you're going to have with Nvidia. I'll tell you what does keep me up at night. The 22 bear market had all those elements that we talked about, right? The rates going up, not happening now. Inflation going up, not happening now. And when people say, "Oh yeah, rates and inflation still going up," nah, dude, it's not like 22. Come on, M2 going the other way. Russia, Ukraine. There's no analogies. Like, it's just not true.
right.
But the real culprit, in my opinion, in 22 was negative earnings revisions out of the big tech companies. And those happened because what happened was we got into COVID. Everyone cut all these costs. And then if you didn't lose your job, you spent twice as much money because you were at home and so the margins on the whole tech side just went through the roof. And then what happened is they just had to normalize. We weren't going to be in that crazy post-COVID party phase forever. And so you actually had earnings that if we pull it up, maybe I'll pull it up in the Maverick tomorrow. You can look at Meta and Amazon and Google. Every single one of the Mag 7, their earnings went down during that period. And the market went down with it. That was the culprit, earnings revisions. The only place I see that analogy in the economy right now is with NVIDIA. So, is that like when you look at the earnings of NVIDIA having gone from, and it's awesome, don't get me wrong, net income has gone from 8 billion to 100 billion. That's not normal, folks. Okay. Let me just tell you. So I think it's vulnerable for that. That's the thing. As a trade, I think NVIDIA is great. I'm sure it'll go to 125, 130. I would be much more prone to buy, Meta or one of those other names as opposed to this with net income having gone from 8 billion to 100 billion. That's the thing you're going to watch out. That's the thing that concerns me the most, is a slowdown enough in the economy with an unravel of specific AI names. And remember, everyone's gunning for NVIDIA. Musk is gunning for NVIDIA. AMD's gunning for NVIDIA. This is just like Cisco 25 years ago. Doesn't mean that Cisco wasn't a great company. Just means that when we have an income go from 8 to 100 billion, people want a slice, and they're going to get it.
Yeah, I like that. When does Tesla bounce? That's a good question.
Tesla just bounced with the market, in my opinion, and I think Tesla bounces 20-30%.
Yeah,
I think Tesla with 280. I think you're going to see that 200-day moving average, and you could see it up by Friday.
Whoop. Yeah, it could be very quick. And Tesla's in an interesting spot due to Musk being in the spotlight here. And I think that's probably part of the reason that it trades so erratically, and not just because of it's Tesla being Tesla. I think it's got a little bit of extra juice behind the emotions these days.
Well, and so but get back to this point, which you'll understand with a little technical talk. Tesla could trade to 300 or 320 a week from now and still be a pretty terrible chart.
Yeah.
So when you're dealing with a big company like this, and with this kind of pin action, I just told you this stock could bounce 50% and be a horrible chart. It's actually pretty interesting. Now again, I have things that we could buy that I think are going to bounce 50% like Talon that aren't horrible charts and that aren't like questionable companies. And the only questionable thing about Tesla, Tesla awesome, AI awesome, all this stuff. It's just they had negative earnings revisions before he went Doge.
Yep.
So I don't know. I don't see earnings revisions turning around at Tesla anytime soon. So it'd be far down my list. Someone's asking about SMCI. I was doing work on this one yesterday. This just gets into the life is too short. The company, you had the Hindenburg thing come out. Then the DOJ said they were going to investigate them. Then the accountants walked because they said we don't trust the company. Do you know how many stocks I could buy that don't have a Hindenburg, a DOJ, and the accountants walking? Basically all of them. So why would I buy this one? I think this is horrible. I mean, because if you lose money in this, you got no one to blame. Okay.
Right.
If you lose
Yeah.
money in Nvidia, you'd be like, oh, I got the timing of the cycle wrong, or it's sentiment. This one, you lose money. If this accounting goes sideways, you got no one to blame. You're just gonna be like, what was I thinking? It's like SMCI is like the equivalent of drunk driving. Don't do it.
I like that. That's the quote of the day right there. And somebody, yeah, right below the question about the Tesla bounce is Microsoft. I think this falls under your high quality oversold type of stock right here to be looking for in this type of environment.
Yeah, this stock could be at 420 in like it'd be 420 in like a week. You got all these high quality companies like this, but this is what I'm saying too to people. I can't emphasize enough because these are subtle things that really experienced portfolio managers would do. I'm not kidding about this. Go sell anything below 3 billion or anything that's making you feel terrible, and go out and take that money and buy something like Talent or Hood or Microsoft because it's a better company. SMCI, if anyone owns it. Like these are all better companies. That's not hard math. That's not some searing insight. So when you can buy them down, I mean, Microsoft. Let's do this. I haven't it's down 80 points. I mean, Microsoft is down 17%. Amazon's the one that I really think, because they had great numbers. Amazon force 240. It's bouncing a little bit today. But down in a straight line, blowout numbers, 17%.
Yeah, these are all, I mean, even Amazon hitting the RSI extreme right there and bouncing. I mean, these are all at levels where it makes sense, where you can take a stab at them and not feel too bad about it at all. You're not reaching.
And I would either, like, if you're long, either do nothing or be active and do these swaps. Like if you don't have dry powder, because you're not going to regret it. And what I'm also doing is I'm thinking through, look, the chances that I feel that we're in a bear market in 3 months, I've entered one, is now 10%. A month ago, it was 2%. Why? Because I'm listening to price. The first journey to getting down 12% in 3 months is being down 12% in 3 weeks. Well, now we've done that part of it. So at least it's, but by upgrading your portfolio, what I don't want to see on this call. So the worst thing you can do in a bull market to bear market transition is stick with SMRs and Rigettis. Right. Okay. It's inexcusable. Like, those are stocks that you date in a bull market to make a quick 200, 300%. Hopefully you do the sell 60, 70% and booked a nice big gain. But as we get into creepier times, get out, swap into great companies that are trading down a lot. Chris Holloway, Constellation, Vistra, all the IPPs are buys. Again, they're going to benefit from tariffs. They're all the same chart, and that's the perfect example of high quality companies that, positive earnings revisions, they benefit from all scenarios. And I'll lay one more out there with the IPPs. I don't care what data centers do. We're facing a power crisis in this country, and these guys are going to benefit.
Yeah, that story is only going to grow. I see requests for TTD. I haven't looked at that. Oh, I was going to say I haven't looked at that chart in a while.
Well, I think with TTD, yeah. I mean, I just know what's going on here. The earnings revisions are terrible.
Okay.
So they've got really bad earnings revisions. Like that one, I mean, I'll say this. I just wouldn't touch it until the earnings revisions change, and they've just been going down. The other thing is, definitely with this stock, it traded below a RSI of 30 and it's not looked back.
Yeah.
Like maybe buy this. I'd rather buy this with an RSI of above 30 and the stock at 75 or 80 than buy it right here.
Yeah, that's fair.
But it's got negative earnings revisions because look, we got a huge stinker in the Maverick. I'll even share this, Deckers. Okay. But the difference between Deckers and TTD, which will look like the same chart, is Deckers numbers are still going higher.
Yeah.
So yeah, I wouldn't touch trade desk. Life is too short.
Yeah, yeah, definitely. I mean, if the 33% gap down on earnings wasn't bad enough, it just it just kept
Well,
on going.
it's not stopping. Someone's asking about Lilly. I think Lilly's fine. You've got decent earnings revisions there.
Mhm.
I just like, I don't know. Lilly doesn't get me really excited right here because I got so much other awesome stuff going on that, you know, I think, like I said, I think it's fine. But this is now we're in a point of the market where you don't need fine. You don't need to stretch. You don't need to go down market, and you don't need to go boring. You can go awesome growth companies that are down 50%. Credo.
Yeah,
And I'm not even saying that you're marrying these companies.
yeah,
Like
sure.
I'm saying you're trading them for a trade, and Credo will make you $15.
Yeah, no, I like it. I like it a lot. You just gotta be sure. Don't be gripping that one too tightly. If it jets up higher, take it off the table.
Well, I will say this, and not that I kind of do this no matter. Well, so the funny thing about my trading strategy is I was about to say we need to trade this market as if it's a bear market. But I got to tell you, if I bought something and it traded up 27% in a week, I'm selling it in the biggest bull market too. Like, I don't care.
Sure.
Like, that's what a trader does. And that's why trading strategies can make money in any market. Because I'm going to tell you folks, okay, look, I think we're still in a bull market and we're going to buy the dips. Okay. But we're watching. And we're going to have a point where we switch over. And when we switch over, there's some losers. You're going to have some losers. You're always going to have losers as part of the game. But then you move into this counterattack. And let me tell you, the fastest money you've ever made is in a bear market, not in a bull market, because you're going to get these huge snapbacks. And it just like, and you'll make 20%. I mean, COVID's probably a poor example, but remember, COVID didn't turn right around. We're booking 20, 30% gains in a half a dozen positions in 3 days. But you know why? Because on a day like today and yesterday, we bought a stock. Bought one yesterday, buy one today, buy one tomorrow. And and it's not just one of these days you're going to be right, because because that sounds like, oh yeah, I guess every clock it hits 12 twice a day. No, because the economy's fine, companies are growing, balance sheets are good, and even if it's a bear market that's going to start in 3 months, you got time.
Yeah, yeah, totally. Let's go. Going on my list here. UPST was on there. I haven't looked at that one in a hot second either. This is getting hit nicely.
Which one?
Upstart, UPST.
Yeah.
I don't know if you have any opinion on this one. This isn't one of yours, is it?
No, this is,
No.
but I mean, this is Credo. Like, this is just the same chart. Like, let me look at the earnings revisions. I'll be honest, I don't even know what the company does. I don't know that it matters for what I'm doing right now. You got positive earnings revisions, off a low base, expensive stock, been beating numbers. It's Credo. It's the same stock.
Yeah.
So I don't even know what they do. Oh, cloud-based lending platform to improve access to credit while reducing. Yeah. But I and sometimes people don't understand it when I say this, that the same stock, like it's the same, like even though they're very different companies.
Yeah.
I don't know what look, unless Upstart misses a number or there's an accounting scandal, I'm going to tell you Upstart's going to trade with Credo. I would bet that the correlation of these stocks is 1.0 in the next 4 to 6 weeks.
That's fair.
I mean, it's 100% correlation between Credo or 67, very high correlation. It's just the same. So look, based on that, beating numbers was look, stock was at 90 3 weeks ago. It's at 46 today. And then beating numbers, still in an uptrend. I'd buy it and it's probably going to 60. Sell your. I mean, this company's not that big. Neither is Credo. Credo is a great example. This is $5 billion. Sell your SMCI and your SMR and buy Upstart and Credo if you want to stay speculative.
I like that. All right. Well, I think that'll just about do it for today. Again, Enrique, super valuable perspective. I feel like you brought to us again. I know it can be tough. It can be a little bit emotional when we have these sharp moves in the market like this, but staying grounded and sticking to a system, all that good stuff, it really works. And for those of you who maybe have trouble with it, I hope that Enrique kind of putting his strategy out there and showing you guys like how he has done these things for years and years and years. You can adjust that little bit, and like I said, rewire your brain a little bit to these market conditions. And instead of burying your head in the sand here, really get down in the weeds and look at these charts and see these bounce opportunities. You know, even if we do go lower after a bounce, this market will have a relief rally at some point here.
So, and this is the thing, take a breath. You know, when you're having that big down day, go for a walk. And then, you know, I just gave you a plan to be active without actually adding more risk. I'd argue that I give you a plan to be active without adding risk, but adding return by selling your small things that are down a lot and replacing them with bigger and better things that are down a lot. And that's trading smart. That's removing the emotion. You know, that's not just even going and say, oh, the market's down, I'm going to double my holdings. Well, yeah, you probably should double your holdings. But I'm giving you ways, and just build one little victory at a time, you know, and do that to keep your head, because this is the time, whether we're going into a bear or bull market, you want to be a buyer right now, today.
Yes. Thank you so much, Enrique. And I'll talk to all you guys in chat, and I'll talk to you, Enrique, next week on Top Trades.
Absolutely. I may be down there with you.
All right. Hang in there, folks.
Thanks, everyone. Bye.